Good morning, ladies and gentlemen. Has the market made you a little nervous in the past 2 days? Well, it definitely was making me nervous yesterday when we were talking about the trades. And at the time of recording this video, the market has basically broken the weekly level down and the trend line down on S&P and Nasdaq both. And you guys know, I did say the first time I take this bullish trade, the market's going to run me over. Well, I'm glad to report that I got out of these trades with my skin intact going into the end of the week, not really necessarily trading anything. We do have PC on deck, and I will be going over how we could actually capitalize on these type of trades right here, how I'll be looking or what I be actively looking for. And boy, oh boy, is it going to be a fun time, especially with the market just absolutely slamming down. Nasdaq down 1%, S&P down 1%, Russell down 1.2%, VIX spiking up 2%. So we're going to be talking about the VIX in just a short moment. But first, I want to talk about the trades that I had just to show you guys what I was seeing, what I was thinking about, and maybe something you can learn from it as well. So looking at the Tastyworks account right here, we can clearly see that basically we're at a realized gain for the day, looking at $17 for the Apple and $40 for the Microsoft. So why did I close these trades? These were both vertical call spreads, or sorry, vertical put spreads. That basically was I was shorting the put option chain on Microsoft and Apple, one for the 29th of December, one for the January 19th. That was more of a longer term trade, but I did say if the line in the sand was getting flirted with or broken, and I was a little nervous with Apple yesterday, and I'll show you what I mean by that. So looking at the market as it continues to absolutely melt down, and I was actually, right before recording this video, I was thinking about, hey, should I put in a debit spread right here? Boy, I should have taken that. However, I didn't expect or understand why we were selling off. So I will try to find that for you guys and talk about it in the weekend deep dive. But again, we're going into PCE, so that's why I'm not really looking for any bearish trades, just because PC could quickly reverse that. So let's jump over to Apple first. So Apple was kind of like not really doing anything in the beginning of the day here, just going sideways, especially flirting with this trend line. And I basically said, okay, well, I got profit on Apple. Do I think we're going to retest the trend line? Maybe. Can always re-enter if we come back down there, taking profit because I was in the red in this section right here. So I'm like, hey, I really don't want to be in the red, especially on this trade going into PC, pretty volatile event. I want to be able to close this position. I'm not necessarily comfortable with it and how the market's reacting. Apple, busting out on the open. So I was like, hey, I'll take profit. It's a couple bucks, not really great, but I just don't want that exposure right now. Microsoft, same story, busting out of the open and just kind of slowing down. And if we jump over to the S&P, and really this is what kind of got me like thinking. I'm like, we've had a pretty massive movement. We're not really having that big movement on the day. We were only up about 0.2 or 0.3% when I was looking at that trade. And we're just slamming down, guys. Like, this is awesome. Recording this video, kind of have some time off now. So we're just basically failed breakout. So this is where the reversal is coming in. This is where we got to change our mindset to, okay, maybe I need to stop thinking bullish and start thinking bearish. Now, that's my default for a lot of stuff. So, understand your bias and own it. But the Nasdaq and the S&P not looking the hottest right now. This could be a pullback. We could easily pull back 50% of this move, which would basically put you on the Nasdaq 396.55 and the S&P. We could definitely basically come back and retrace 50% to that area of 464.12 or 465.10. Those are the two areas. I mentioned that 464 level 12 in the weekend deep dive, but I do want to emphasize that we could come back there. We don't have to come back there. Volume has been pretty light going in, kind of reversing, so we would expect if we reverse down, volume to pick up, especially with this move. And every word I've been saying, guys, the market keeps going lower and lower and lower. So for me, I'm patting myself on the back that I got out of this Apple and Microsoft trade because this is looking like doo-doo. So I took some profit. I was like, hey, I just want to relax on Christmas. And there's nothing wrong with taking profit if you don't like where the trade is going. You can always re-enter. You can always reopen. You can adjust the trade. Now, how do you set one of these things up, Mike? Well, I'm actually going to show you guys that. So look, we're going to use the S&P as an example, and we're going to talk about how you can capitalize on this trade right now. So if we're going to go to the 15-minute mark, just so you guys can see, I need a better price action indication here. Pretty nice move down. So I'm going to start off if you were thinking bullish. Well, if you're thinking bullish, I would wait for that 468 price point right here. That would be your localized low right here that you're saying, okay, at this point is when I want to be looking bullish. So if you're assuming at 468 and we're going to have a nice PC rally, let's say to a higher weekly breakout at 473, we're not going to go break the 464 level, then we can go to Tasty Trade and I will show you how to set up this position. So going over, and again, this is going to be different for every single person that betting on your broker. I like Tasty Trade just because it's an option broker. I kind of do options as my main thing. So again, like with everything, we're going to type in SPY, which is the ticker for SPY. We're going to go here and we're going to talk about the December 22nd. We're talking about PC. We're thinking about the market. We said 464 is where we don't think the market's going. And basically, we're going to set up a trade there. So around these 2 points is where we're going to set our trade up. We are going to sell the closer to the current price option. So we're going to sell this 464 put. All right, we're selling the put. We're thinking bullish. Then we're going to buy a put that's further out of the money, basically cheaper, to cover some of that cost. This is how you set up a standard spread. Now, I wouldn't recommend this being so short term. It's a 1 to 10 win to loss ratio, so you're not necessarily getting a lot out of it. I'll probably go closer to the money, probably a 465, 464, and then wait again for that line to basically come back down to this area down here. I wouldn't be placing this trade right now just because market's moving down. I need to see a pause in this momentum. Right now, I'm getting 0 to no pause, and this is a failed weekly breakout. This is basically where you don't go full dang bearish, guys. You 60,000 net short positions are going to probably fuel the next rally when PC comes out. Before I digress, side rant over, but I'd be waiting for down here to basically say, hey, this is where I want to basically be going. And honestly, this area right here, that 468 level, is probably going to get blown out. So I'm looking at 464 as maybe my new entry point. We have to see, got to get a couple more candles here. But going back to Tasty Works real quick. So looking at this, we basically have $15 or $14 max profit versus $85 or $86 of collateral that we would have to post. The way spreads work, guys, is because you're taking advantage of theta, if the option goes in the money, you have to cover that with the collateral. So you don't necessarily lose $86 if this trade doesn't work out. However, it's a higher risk versus standard debit spreads where you basically pay the $87 to make the 13. So if I were to swap this trade on you guys, as you can see here, maximum profit 87, maximum loss of $13 because that's the reverse. So again, that's where everything is set up. So we're talking about credit spreads. When you hear credit, that means you are shorting the closer to the money option and buying the further. Debit is reverse. Each of them have their own inherent things and tools. So usually you do this for longer term trades. You don't do this necessarily short term. But if you want to be ballsy and basically do the short term or the long term, you can. It's up to you. So looking at this, we basically would sell the 465, buy the 464 for a spread of $11 and a maximum loss of 90 collateral. So essentially, you would gain $3.65 on the theta every single day. So in the course of the next few days, you would make nearly 80% of your profit if the trade basically moves sideways or up. So now flipping to the bear side for you all. So let's say, we're not going to make a new high. We're not going to come back and retest this area right here of basically 476, right? So that's your line of saying, you're going to even say, let's say 473. That's what we're going to be looking for. And like I was saying, guys, looking for confirmation right here. Market's kind of picking up in this area. So I may even swing that bull trade all the way up heading into PC because this is an interesting point. Not necessarily know if I'm going to do it right now, but we'll see how it all plays out. So jumping back over to the trade. We're at 470. I'm saying 474. We're not going to get there. I'm setting up a trade there. Remember, it's the reverse. I'm showing you now. You're selling the 474 option, buying the 475 option. Much more profit in this just because we just came from there. So there's a higher expectation that we may go back there. So that is why you're seeing this set up the way it is. $20, $80 max risk, and a theta of $5.82. Again, theta is dependent on the percentage of what the value of the current contract is. As it gets closer in the money, meaning higher contract value, theta burns you more because it's all proportional. But knowing that, you're going to gain approximately $6 per day, so you basically land up with 75% of the profit if the trade moves sideways or not at all, or moved away from that point. Would I be setting this up with the volatility of the market as it is now? No, not necessarily, but we just have to see how that all plays out in the long term. So this is pretty interesting just to see how we had the nice move down and we're kind of just stabilizing around it. So would I place either of these trades? No, not really right now, but this is how you guys can set them up. And basically I'd be looking at more long term. So what would that long term be? Well, let's take a quick gander at, like, let's say if you think you're going to get a Santa Claus rally to the 19th, you could easily set up that bearish trade, or let's say bullish trade, right? You're playing the bullish scenario. So let's set that first up for you guys. And let's actually go to a larger time frame. So if you're saying that we're not going to be coming back down to, let's say, 454, we can go back to Tastyworks and we can sell a very long-term option out there. So as we can see here, we can basically set up a 454 sell that option where we think it's not going to go, and we would get 171, but we have a maximum loss of 45K. Then we basically buy the other option to cover that for a $20 difference, maximum collateral of $180, and basically 30 cents collateral. So you can be more or less aggressive with your ranges. So again, you could make this wider, make it narrower, just depending on what collateral you're willing to put up for the profit. And right here, I have it set up for 456, 453, and that's 50 cent theta. Again, this is all the way to January. Maximum profit $33 and maximum loss of $267. So not necessarily the greatest range out there. However, if you set up multiple of these and we're playing a very non-volatile direction, then it could be a very interesting thing on the S&P. You could go closer in the money if you wanted to, or just stay further in money and let data kind of just burn it out. Especially with these like longer term options, you're definitely going to have low theta with a higher delta, meaning the contract value is going to fluctuate a lot, but you really have to look at the overall direction and understand the market a little bit better. Now, I will cover debit spreads in an upcoming video, guys, so make sure you're subscribed to stick around for that. And that would be something more for those short-term plays if you want to get into the options market. And just recapping the S&P right here, it seems like we may be stopping in this area. However, we have to see these are 15-minute candles, so how the next one opens. Do we get confirmation? Do we get back above 473.73 going into the next day? And as you can see here, we got the first sign of a green candle going in. However, we're down pretty massively, so I need to go understand, one, why did this happen? We do have Apple and all these companies like Apple breaking its trend line, so I want to see it get back above it. Microsoft kind of just like hanging out right here, could be setting up a possible trend line right there. But looking at the broader market, like your Nvidias, your Netflix, your Googles, not looking too hot. Google actually didn't come back to fill that gap. Amazon selling off. So this is not necessarily looking at the most bullish times, but hopefully that gave you guys some more insight. Throw it down in the comments section below if you liked this video, didn't like this video, confused you, didn't confuse you. And as always, hit subscribe. It always helps the channel out. Thank you so much for watching, and I hope to see you in the weekend deep dive.